Hello and welcome back to the strategy series. In this video I'm going to talk about playing a false signal. Now most of you will probably know by now that a shooting star candlestick or a hammer candlestick is an important signal. And if you think about it, a hammer, for example, shows the sellers coming in and then being rejected. And then when you break above that, that's a very bullish buy signal, especially at the bottom of a trend or the bottom of a wave higher or lower. A shooting star is very much the same thing as a hammer, except in the opposite direction. We get buyers come in and then they get blown out and then eventually they sell off. And the reason is they have to cover their positions by selling. It's a sign of a reversal. But what happens if a reversal sign fails? And that's what this is about. So let's take a look at the Australian dollar, US dollar daily chart. You can see that there was a shooting star here that did work out, as you would expect. That's a good sign for the sellers. You can make an argument for this shooting star working out and this one working out. But there are times when they don't. And I think a lot of traders miss the point on these particular candles. Here's a shooting star at the bottom of a trend. Yes, I know it's not at an extreme high or low, but what does it tell you? It tells you for that day, buyers came in and tried to push the market higher. Now, if you break below there, that's a failure of buying pressure and you go lower. But what happens when you break above it? Well, the next day, we went to about here. And then the following day, we went to here, formed another shooting star, broke above it the next day, and so on. So what does this tell you? It tells you that the market is very resilient. It's resisting all resistance, if you will. And I think that is a signal and a trading system that people ignore at their own peril because it tells you quite a bit. It tells you that the sellers just cannot get their hands on the market. You can see that it was not until several candles later that the sellers found any pressure at all. And from the initial signal of breaking above the top of the shooting star, we still went higher. So pay attention to these candles that don't work out. I think far too many traders don't pay attention to the failed signals. Failed signals just mean signals in the opposite direction. It's kind of esoteric, but there is a lot of truth to it. Because as a new trader, I used to get frustrated when hammers or shooting stars didn't work out. Those were my two favorite candlesticks, still are. And when they didn't work out, I felt like, the market wasn't doing what it was supposed to do. And this tells you that the market is doing exactly what it's supposed to do. When you get a rally and a failure, but the market jumps back in and continues to try to fight, that's a very bullish sign. This being broken to the upside is a very bullish sign, just as a hammer being broken to the downside is. Even later, so for example, this hammer-like candle here being broken to the downside on this candle, that shows that support was broken down. So you have to look at these as support and resistance and nothing more. There's nothing magical about the candlesticks. They just show you where they are. So therefore, if the support or the resistance gives way, then you know the other side has won, and it's time, in this case, to start buying.